You've just raised $880 million. Why raise this capital now amid a global pandemic, economic disruption, and where do you plan on investing it?
Thank you, Selina. The reason why we raise this fund right now is that it's probably the best time to invest from the perspective that great companies often are invested during a down cycle. And certainly the coronavirus impact, globally is probably going to create, recessions around the world. And that's when great companies actually get funded.
So during recessions, that's when great companies are founded. In what sectors in particular, and what geographies?
Well, we believe that the U.S., China, and Japan markets, the three largest IT markets, continue to show great promise. In particular, I think U.S. and China, they lead the technology market today. And we think it's a natural location for great companies to come out. And I think over and over, U.S. and China has been the leading returns generator for the venture capital market over the last decade.
But David, given growing calls from Washington to decouple financial flows between the U.S. and China, many of your limited partners include U.S. pension funds and endowments. Are they worried about investing in China at this moment?
So I think there are two categories of investors that you've mentioned. I think one group believes the long-term growth that in China and the Pacific Rim will continue to grow. And as you can tell, both Chinese tech and U.S. tech companies are now at an all-time high in terms of market cap as public companies. I do think there is a growing smaller group of investors who are viewing the risk and kind of shying away from investing heavily. But to me, when you look at the actual numbers and when we interact with many of these investors, I think there will end up being a rounding error because at the end of the day, people still want to continue to invest in both markets and because, again, tech is going to be even more important post-COVID.
But there are growing risks to investing in Chinese companies. DCM was an early investor in Musical.ly, which was then acquired by ByteDance, was merged with TikTok, which is now facing great scrutiny around the world. The U.S. says they're considering banning TikTok in the U.S. India has already banned 59 apps, including TikTok. So what does that mean for the ability of Chinese internet companies to truly go global?
Well, I think Chinese companies will continue to truly go global, just like Sony and Panasonic before from Japan. I think where the challenges are in what people would consider strategic areas, right? So, I mean, Huawei obviously in the communication space, communications, energy sectors, those are very sensitive areas for any country, and I think with TikTok, what we're seeing is the rise of social media, whether it's something that is strategic to a country or not. The verdict is still out, but traditionally China's been a sandbox where they didn't allow Facebook or Twitter to come into China. Does U.S. do the same thing? But U.S. has freedom of speech, and there's a lot of core values that blocking certain services from other countries, defies the values of the United States. So it's going to be quite tricky, I think.
Are you worried that India's ban, though, could serve as a model for other countries in addition to the U.S., that Chinese companies could increasingly find themselves locked out of certain markets?
I think potentially yes, but I think India is actually following the China model. Again, China is the one that actually blocked Facebooks and the Twitters and the other social networks. So I think India is following suit. It has worked well for China because the indigenous players, whether it's WeChat or Kuaishou or ByteDance, they are doing quite well in those countries. So, I think yes, it's limiting for China, but that's exactly what the U.S. companies felt trying to get into China. Again, the question is, what sectors?
And David, what are the implications of the Hong Kong national security law for tech companies? You have Facebook, Twitter, Google, they're pausing data requests. TikTok said it's going to be exiting the market.
Well, I think TikTok exiting Hong Kong is probably a little bit more of a PR play to make sure that they don't be viewed as a purely Chinese company, because a lot of the investors in that company are actually American-based. I think Hong Kong, after it goes over this bump, actually will flourish in terms of a market for Chinese companies to go public. I think a lot of companies Chinese companies listed in the U.S. are starting to look at the Hong Kong market to go public. We hear news, for example, Sina is planning to go private. Many companies have, in U.S. listed Chinese companies, are planning to go private so they can have all those options in the future to see where the best market to go public is.
But for your portfolio companies that are not based in China, how are they looking at the implementation of this security law? Do they just need to treat the Hong Kong market in the same way that they treat working in the mainland?
Well, it's in flux. I do believe that from a commercial business perspective, I don't think there will be a huge change. However, in the sensitive sectors, whether it's communications, whether it's energy, whether it is food sector, anything strategic to the country or the region, or military, for example, I do think that it will hinder investors like us. The good news is that we, for example, at DCM, we do not invest in those sectors, and therefore we are relatively shielded from the new national security laws.